Hi, I'm Jimmy Hayden. I'm with RE/MAX 100, and I'm your local Homes for Heroes affiliate here in St. Mary's County. Today I'm here with Mike Derby with Fitzgerald Financial. Mike?
Good afternoon. Thanks for having us.
Okay, so today we're going to go over the buyer checklist and things to do, as well as seller checklist, things to do. We'll start with the buyer, and again, Mike being in the mortgage industry, plays a crucial part of any deal for the most part, unless it's an all cash funded deal. So Mike's going to jump in as we have, as we're discussing checklist and things to do. So the first thing we want to do is ask, do you have stable income? Length of employment is important.
Right, minimum 2 years of employment.
Okay.
Typical.
And then if you don't have 2 years.
If you don't have 2 years, and the situation nowadays is different, COVID being all different, we can go back to your previous employer, we'll explain why you changed positions, why you had avoided your employment, and pick up with the new employment.
Okay. But for the most part, you want 2 years.
For the most part, yes.
Okay. And then the second thing on your buyer checklist would be, do you want to stay in the same area for a long period of time? If you don't want to stay in the same area for a long period of time, or you don't see yourself doing that, really buying is not always the best option. Even though interest rates are low, everyone wants to buy, it's not always the best option if you're planning on moving, because of all your fees that you have to pay when you buy, like your transfer taxes and origination fees, and you could probably elaborate more on that.
Right, origination fees, transfer taxes, all your closing costs.
Yeah. And then you want to make sure that you're comfortable managing debt. When you own a home, debt is one of those things that you have to make sure you pay. Credit is super important. I try to relay that to my kids all the time, how important your credit score is. Whether you're renting or buying, credit score is super important. I can't stress that enough. Another thing would be, do you have an emergency fund? Do you have money to pay 1 or 2 or 3 months of mortgage? If you got sick or had an accident and weren't able to continue working, do you have that emergency fund established? And the mortgage companies probably want to see something similar.
We want to see the funds, right. Whether it's 2 months or 6 months of funds, guaranteed funds, in case there is a crisis.
Okay. Speaking of funds, what about down payment?
Down payment ranges with different loan programs. As part of working with a realtor, one of the most important things is to get pre-qualified for your loan, possibly even before you meet with a realtor. Make sure you check your credit, get with a loan officer, and I'm with Fitzgerald Financial, which is a division of Town Bank Mortgage, and it's my job and my pleasure to take you through the process of what your credit score means, if there's a problem, how we can help you with your credit score, and then what your family values are, what your lifestyle is like. In the process, going through and comparing your debt to income, your loan to value, where you want to live, and how much you want to spend. It's very important that we understand your debt to income ratios and make sure that they are where we need it. Your cash deposit, if you have cash on funds, we can do loans with 0% down. You still have to have cash to close. We can do loans with 3% or 3.5% down. Multiple different ways that we can take a look at it. The important thing is for us to have an opportunity to sit down with you and go through the pre-qualification process.
I get buyers all the time, or renters come to me all the time stating, I really wish I could buy, but I know my credit's not good enough. I'm like, let's talk about it. So I get Mike to sit down and talk to them. If their credit's not good enough to buy at that time, he can put them on a path to establish good credit where they could be a new home buyer. So the next thing would be, when you're talking to that lender, ask them to do a pre-qualification letter and ask them how much you can afford, what monthly payment would be good for you. And the number that they give you, you don't have to go with that. You know better than the lender how much money you really want to spend on a house payment, because it's going to be with you for 20 to 30 years. And then, are you willing to make sacrifices to become a home owner? Not all sacrifices are going to be negative. You do have a tax return. Your interest that you get or pay throughout the year will be tax deductible. So some things are a positive, not all negative. Anything you want to add?
Most definitely, no. I think through the pre-qualification process, your lifestyle, making sure you can afford the home that you buy, I really enjoy working with the first-time home buyers and going through this process of letting them understand what their credit score means, letting them understand how much the house payment is going to be. Just because you qualify for $450,000, you have good jobs, you both have very good credit scores, doesn't mean you want to spend that much. Think about 2 years down the road. Are you going to create a family? Maybe you don't have kids now. Maybe you need an automobile payment in the next 6 months to a year. So just think it through. Like Jimmy says, spending the top doesn't always make sense.
All very good points. So from after the buyer checklist of sitting down, answering all those questions, the next thing we'll do is, once you're pre-qualified, we're going to start with the home search. You're going to get with an agent, a realtor, to help you find homes, and maybe they can set you up with automated searches, so you don't have to keep logging on to different websites. I don't like all the extra websites out there, because a lot of people come to me and say, hey, I saw this house on this website that says this house is for sale. And you go to look at that house and it's been off the market for months. So make sure you're linked to the MLS, whatever system you're using. The realtor is going to also help you with scheduling to show a home. They're going to schedule the appointment for you, and then they're going to meet you at the property and show you the home. When you're looking at houses, thing to look for before you even go to the property, you want to think about the location. You know, I show some homes sometimes, and we get there and the feedback is I don't like the location. You can see the location a lot of times before you even start the home search, but if it's something that you still want to see because you think you can do something with the location being there, absolutely, by all means, check it out. The space, what the home offers, the amount of bedrooms, the amount of baths, you know, check those things out. Whatever's most important to you, and then not only with the location, make sure that the school is right and it's close enough to work for you. You all want to make sure that those are all good things before you even get to the property. And then once you're at the property, you want to look at the condition of the property. The major things are roof and septic. Here in town, you don't have too many septics, but we're on public water and septic. But septic is a really big issue. I've had a couple this month that had failing septics. I'm sure that you have something to say as far as condition of the property in order to make a loan.
Almost definitely. With all, septic systems that has to be approved. We have to have a working, functioning septic system, plumbing. There's going to be an appraisal. An appraiser is going to come out and appraise the property. If the appraiser sees things that are not fit or not habitable, he's going to make it. And we're not going to be able to get that appraisal where we need it. Another thing to think about as far as location, whether you're looking at a condo, a townhouse, a PUD would be a planned unit development that's in a neighborhood such as this here. You have to think about homeowner association dues. You have to think about PMI, which is mortgage insurance. All these costs will be figured into your debt to income, which works your ratios to see whether or not you qualify. Some HOAs are $30 a month, some condo HOAs are $150 a month. So it's all information we would go through and discuss where you want to live and the cost associated with that property.
Some condos in senior centers are $650 a month.
Yes.
So they do vary a lot. So once you find the home that you're looking for, you went out with your realtor and you've searched the homes and you looked and you looked and you finally find the one that you really want to zoom in on, making the offer is the next thing. And in this market that we're in today, when the inventory is very short, we're seeing multiple offers on all properties, especially the range from 200 to 350. Those homes we're receiving a lot of offers. I just put an offer in on a property over the weekend. It had 16 offers on it. And we went above asking price, which is very common, and we still lost out. So, but there are things that you can do to help your offer, not just with price, but your deposit amount. If you make a higher deposit, it shows the buyer is serious. If you speak with the seller's agent and find out, you know, what's important as far as a timeline for moving for the sellers. Maybe they don't want to move out until 45 days. Maybe they want an extra month to stay in there and they were just testing the market. Those things will help you. And then of course financing. The government-backed funding, USDA, VA, even FHA,
Right.
are longer times for settlement for the most part. So conventional, I'll let Mike continue on that.
Right. Typically with conventional financing, once again, with conventional financing, if you're a first-time home buyer, it's just 3% down. Based on your income and your debt, we can get you qualified with 3% down. 3% down, you'll still have to pay property mortgage insurance, and of course with the HOA fees, but we'll go through all those when we sit down and talk. Conventional FHA financing. FHA financing is 3.5% down. It does require more in-depth appraisal and processing through FHA and USDA. USDA financing, we're at 100% financing. There are funding fees that are involved with that. They're incorporated into the loan, and then there's also a monthly insurance fee on that also. VA loans are very popular. They deserve it. Our veterans deserve it. 100% financing, no monthly mortgage interest, and very quick closing. USDA and FHA, getting through the process, we're going to need 45 days roughly to get through the underwriting, to get through that process. Conventional, you can do conventional loan. We have zip loans out there right now where we can close within 15 days. If we have a qualified buyer that has all their paperwork together that we need, we can close that deal in 15 days, which may be attractive to a seller.
Right.
Quick. That's almost like cash. Almost like a cash deal that you're selling that quick.
Yeah. I'm not sure if the title company can even turn around things within 15 days, probably, but
For us, they can.
yeah, that's
For us,
good.
they can.
That's good. And you said something about USDA 100% financing. There are income limits with those.
There are income limits. In St. Mary's County right now, for a family of less than 5, it's $112,860. That's the highest maximum income, and that's for everyone living in that home. You have a mother, father, and a teenager that's employed, I have to count all their incomes. It's everybody that's in the home. FHA, there's no income limits on FHA. However, the max loan amount on FHA is $356,000 right now for the max loan amount for FHA.
Okay. And then the FHA loan limits for St. Mary's County are typically lower they are lower for St. Mary's County versus our neighboring Calvert and Charles County.
Right.
That,
It is based on, it's really based on the cost of the product, the average cost of the sale of the home. And when you leave St. Mary's County, you go to PG County, Montgomery County, the cost of the homes rise. And so the average does go up.
and I always contribute that number to a factor when it comes to our median home sales price is always lower.
Yes.
For St. Mary's versus Calvert and Charles, and I think that has a lot to do with
It
it.
does. That's what controls the limits.
Okay. Okay, so we've went out and we've made the offer. Now we're expecting the contract. So we finally get the word that you're under contract. Our offer's been accepted, and so then that time starts clicking. And believe me, when you're under contract, I can't stress this enough. Timelines mean a lot. There's so many days that you have to get things back and get things done. Everything is date driven. So the first thing you want to do after you're under contract, you want to send a copy of the contract to your mortgage lender, and you want to start to schedule your inspections. So any inspections that you wanted to do that were in the contract that you said you were going to do, you want to go ahead and get those scheduled. And then a lot of the home inspection companies now can do multiple inspections. So they can do your home inspection, they can do a septic inspection, they can do a radon test, they can do termite. You don't have to go to different companies to do this. A home inspection company can do, most of the time, do them all that you want, even lead-based paint. So remember that you're under contract, everything is date driven. Most of the time, when you submitted your offer, you told the sellers how many days you were going to have this report back to them asking for things to be corrected. So you got to meet that date. Then you want to continue to work with your lender, getting the documents. Your lender is going to probably aggravate you a lot, and he's going to say, I need this and I need that.
Multiple times. I mean, a lot of this we'll have up front with your bank statements, your 2 years of tax returns, your 2 years of W-2s. It's different if you're self-employed. We need even more information. We'll have all that up front. However, as we go through the process, we have to update that information. We'll have to update your bank statement. We'll have to update anything that has changed. One thing, please, once you start the pre-approval process, your credit is good. We've established that your credit is excellent. Please do not go out and get new credit. Do not apply for a new credit card, a loan, a car payment. Do not apply for anything, leave everything alone. Do not, as crazy as it sounds, do not pay anything off. Leave everything the way that it is. Please do not have a lump of cash all of a sudden appear in your bank account. Okay, we have to trace that cash. We have to determine where it comes from. These are things that will extend the process.
And I have known deals to get to the settlement. It's never happened with me, but I've heard of deals getting to the settlement table and someone went out and bought a new car and the deal was shot down at the settlement table because of that. So those are very important things. Also, during this time, your title company, they're going to be doing the title search on the property. Title search is running the property back to make sure there's no liens or extra anything that's going to encumber the title to when you transfer of the deed. And then you want to start packing. That's what I'm kind of doing here. I'm packing because I'm moving. So it's a mess. It's a long time, but it's well worth it at the end. So then there's 3 words that you really want to hear when you're involved in a contract, and that's clear to close.
Clear to close. Everybody's happy.
What does that clear to close mean?
Clear to close means it's went through our process, it's went through our processing, it's went through our underwriters. Everything has been checked out, it's came back from the underwriter that the loan is clear to close. And I'll get a little green button on my screen that says it's been submitted, it's in processing, and then that clear to close is what we're looking for. All the documents, all the title work, everything has been checked, verified, and we're ready to get a settlement.
And at that clear to close, you should have from your lender.
You're going to get a closing disclosure. You're going to get a closing disclosure prior to that. As soon as it comes out of there, before you go to closing, it will spell out all the details of that loan, of your closing, the sales price, the payments, everything that's involved in it. You'll get that on the closing disclosures.
And as far as the taxes and HOA, if you're in an HOA, when you settle, are those things are prorated, right?
They are prorated, right. We have to account for years worth of hazard insurance up front. We have to account for a certain number of months of homeowners and property taxes. Everything in your debt to income is figured out with your P&I, your principal and interest, your income tax, your property tax, and also your homeowner's dues. We do figure in the HOA fees, however, that is not part of your escrows. You would pay the HOA yourself.
Okay. So once you clear to close, those are 3 words that you'll remember from this. Then you have settlement date, and that's the day that you meet at, whether it be your agent's office, your title company's office, your lender's office. You'll meet with an attorney or a title attorney that will go over the documents with you, and you'll sign everything and you'll be notarized. Then it's just a matter of moving in. Once you move in, you want to make sure that before you move in, you want to make sure you have the utilities put in your name. And then your SMECA or your electric company, your water, if you have it, the sewer, all those, you want to make sure that you have that, because the last thing you want to do is, after going through this painful process, is to walk into your house and find out your electric's turned off. And then days after you settle, you want to try to establish a budget that you are comfortable with after you have this new home. You also have a new home payment, new house payment, and you want to make sure that you establish a budget to try to help, with that process throughout the year. Anything you want to?
No, you want to make your payments.
Yeah.
Definitely make your payments.
And you don't want to forget to apply for the homestead tax exemption here for the county. It caps your taxes on the first $30,000, and also taxes where they can't go up any higher than a certain percentage. I believe it's 3%. And then be sure to save your closing documents for your tax for the year-end tax filing. And happy home ownership. Got anything else you want to?
Another one thing, we're focusing on new home sales here with Jimmy, which is great. Another thing that's very popular in the market right now are refinances. As Jimmy has said, property values have increased drastically over the last 18 months, let's just say. Maybe a little shorter than that. A lot of people don't realize the equity they have in their home. That equity can be used to pay off credit card debt. It can be used to redo your home, redo your kitchen, put your swimming pool in, whatever you would like to do. And we would encourage you to take a look at your rate. And if your rate's at 4% or above, to contact us and let us talk about refinancing. You can do a straight out rate term refinance. You can do a cash out. That cash is yours to use for anything that you see fit, in regards to the home. So it's just something else to think about. Values are up.
Okay. Lastly, I know we're in COVID times with the mask and things of this. RE/MAX 100, we do have these safe showing kits that are good for buyers. This one is a buyer's kit, and then we have one for sellers too. Just trying to keep everyone safe. We want our clients to come back year after year, and we want their family members to come back year after year. So that's it for the buying checklist.